Hey guys, so we're going to have a quick look at selling your wares. What happens financially when you're selling your wares in terms of the accounting side of things? And again, you don't need to be a rocket scientist. The accounting system is extremely complex that accountants need to deal with. We're going to learn what you need to understand as the business owner so that you can make sense and have confidence making good decisions. So let's go through it. First of all, we've done some marketing out in the real world and someone said, hey, I want what you're offering, and they give us an order. It may be verbal, it may be a purchase order, it may be an email, it doesn't matter. Somehow we get a legally binding type of document that says, please go ahead and provide me with your product or service. Next, what happens is we put together our product or service and we deliver it to our client, at which point we need to generate an invoice. Once we have supplied them with whatever it is that we do, we generate an invoice. Now here's where it gets interesting, okay? As soon as you generate that invoice, and you need to do it as soon as you have delivered the product or service, since you've earned the right to give them that invoice, it's going to show up on your profit and loss on that date, okay? So you want to do it on the date that you actually issue it, because the sooner you issue it, the sooner you're going to get the money in. Now, notice the wording of invoice. It's invoice, okay? When you get an invoice, it's a promise. It's a piece of paper that logs the occasion. It doesn't mean cash changes hands. And this is a really interesting one because I've got down here a couple of things that need to be finished off on your financial statements, in particular your profit and loss statement or your income statement. Profit is not the same as cash. When you go through and watch some of these other videos, that's going to become more clear exactly what profit is. So it hits our P&L and you'll see it on that top line. You'll learn how to read the P&L, profit and loss statement, also called the income statement, in some of the other lessons down the track. So it hits there first. At the same time, it hits your balance sheet, okay? And it goes onto your balance sheet as a receivable, okay? So the balance sheet, as you go through here, you're gonna see more about it. Now, here's the thing to remember. The accounting system, as I said, is very complex, but there's one simple thing you've got to remember. It's what's called a double entry accounting system. So every time we do something, it gets entered in two places. And this is to help us keep track of information and also be able to make meaningful decisions on that information, okay? So it's a kind of a check and a balance thing. So as you can see here, something happens, a transaction happens, and it gets recorded in two places. So it's sitting on our balance sheet that somebody owes us some money. Then we go along. Now this is where accounting is divided into two parts. It can be either accrual or cash basis. Now I'm only going to talk about accrual basis because accrual takes into account time differences. Cash-based accounting is when we're just using cash for buying and selling everything. We do not do accounts or anything like that. So this is only talking about the accrual side of it. And the way I remember it, it's accrual, because sometimes it can be cruel, that time in between when you provide your product or service to a client and they seem to take forever to pay you for it. It's really cruel. Okay, so let's say finally someone's paid us. Maybe they've paid us quickly, maybe they've strung us out a bit, it doesn't matter. We'll talk more about that later on. Here's what happens. The money hits your bank account. Now from a financials perspective, here's what happens. Our balance sheet goes up on the cash part of the balance sheet by that amount. Essentially what happens is the number that was kind of sitting in your receivables as what was owed to you now turns up in your bank account. So you'll see at the top of your balance sheet, cash will go up by whatever that amount was, and the amount in the receivables, that money that they owed you, will go down. You will also see an entry pop up on the third financial statement. There are three: the profit and loss, the balance sheet, and the cash summary, also called the statement of cash flows, a couple of different versions, but they're your three main statements. You will see income showing on the cash statement. As we go through all of these, you're going to start to understand how they hang together, which ones you need to focus on, and which part of which ones at what time you need to be aware of to make great decisions. Hopefully that makes some sense. We're going to move on to the next one now.